Resurgent India Knowledge Series presents virtual session on the past, present, and future of co-lending. Moderator Mr. Ashish Agrawal, Director, Resurgent India Limited. Eminent Speaker Mr. Abhay Singh, GM NBFC Alliances, State Bank of India. Mr. Dhrubashish Bhattacharya, GM Co-Lending, Bank of Baroda. Mr. Vinay Bhatt, GM, Credit Marketing, Karnataka Bank. Ms. BGSS, Senior General Manager and Group Business Head, The South Indian Bank Limited. Ms. Snehal Gupta, SVP and Business Head Partnership, Credit Suisse in India. Mr. Kushal Rastogi, Founder and CEO, Knight Fintech.
Good evening, everybody. I'm Ashish Agrawal from Resurgent India Limited, and I'm very much delighted that I'm the moderator of this session where we have the very knowledgeable, eminent speakers who are basically the co-lending heads of their organization, or they have vast experience in the banking and the lending business or lending industry. And we have the audience also, the people who are joining with us from the various backgrounds. And so I would like to welcome all of you for joining with us in this co-lending webinar, which is where we will discuss the past, present, and future of co-lending. And friends, the co-lending, if you see, it was started with the co-origination in 2018 when the RBI came out with a circular, and it was it could not taken up the way it should taken up. And then again in on November 5th, 2020, this circular has been revised, and it came in the form of co-lending actually, where the RBI has given the clear-cut guidelines for banks and NBFC that what are the major aspects which need to be covered in the co-lending. So it was kept in mind that the priority sector should be the focus area for co-lending. And there were many other areas were there which were discussed in the RBI circular in November 2020. After that, this co-lending has taken up the momentum, or it started working in the banking and the NBFC space, and mainly for the MSME and the retail lending side actually. So today we are discussing on the whatever has happened after this circular, where we have reached, and what we did in the past, and where we are actually, or where we want to reach, or where we'll reach in the coming future, or in maybe next 5 years. So I hope that all the audience, or the people who are joining with us, they will be more knowledgeable after this session, and they will know more about the co-lending. And I'll request to all of you, please make it more interactive. You can ask relevant questions whenever you think that anything which you want to ask. Our panel speakers will try to cover up these questions. If it will not be covered in the session, then we'll try to take up these questions from you, and we'll discuss with the panel speakers later on, and we'll send you the reply of that actually. So it will be the great help if you'll ask more and more questions, and we'll try to understand this topic in a detailed manner actually. Although we will try to cover up in a manner where it should be very simple, and whatever the questions or whatever the challenges, opportunities are there, it should be discussed in this panel actually. So I would like to once again welcome to all of you in this webinar. And so there is a small PPT which we have just prepared where we'll try to cover up the co-lending aspect till now, whatever has happened actually. So I'll ask my team to please run through this PPT. So Rohan, if you can just go on the next slide. Next. So what is co-lending? I think many of the people who are not into the banking and the NBFC space, they are not aware the co-lending aspect or what is the co-lending actually. So co-lending is basically it's a joint lending by the two organizations and where the certain guidelines are there and this RBI basically made it that minimum 20% stake should be taken by the junior partner NBFC and 80% by the bank. So it's an 80-20 rule or where that minimum is 20%. It can go maybe 30%, 40%, whatever has been decided between the partners. So 20% is minimum. That's the one thing where the joint lending is allowed under co-lending model and where majorly the retail or the MSME loans or housing loans are covered in that co-lending, but there are other products are also there, vehicle loan or the education loan, gold loans. All these I will discuss these products later on in this slide. Next. So these are the major products which are covered under the co-lending, but there can be other examples also. So agriculture or micro MSME loans, housing loans, vehicle loans, these are covered under priority sector, and non-priority is also now discussing on the co-lending segment. So the personal loans, gold loan, machine loans are also covered in that. Next. So if we discuss on the current where we have reached in the co-lending space, so as per the public data, as I told that it started in November 2020. This was a beginning, and that time this was a COVID time actually. So 2021 there was nothing, there was no big progress, but in 2022, as per data, there was 5,000 crore of co-lending partnerships, which were, or maybe the co-lending portfolio, which was generated. And in 2023, it become to 25,000 crore. So five-fold increase from 2022 to 2023. And so if they'll keep this pace this year, then definitely it can be more than 1 lakh crore in this year. But we'll know the numbers later on and more than 25 banks and 55 NBFC. This is data which we have compiled from the various sources. Those are already active in the co-lending space and they have tie-ups or their partnerships and which includes the PSU, private foreign banks. But if we see the overall volume, still the PSU banks are leading in terms of the overall volume in the co-lending space. And most of the small and mid NBFCs are tied up in the co-lending space with the banks, either in the MSME, HFC, or the MFI and gold loan segment. So still we see the overall co-lending space. MSME, HFCs, and the gold loan is leading in terms of the different products in the co-lending segment. And we see the different different segments of co-lending. If you see this co-lending is the game changer for the NBFCs and the banks, where this because of this co-lending, some of the NBFCs are more focusing on the co-lending part, and their valuations are also getting better and better actually. Next. So these are the banks which are already in the co-lending space. They're tied up with the NBFC. So we see now bank-wise the number of NBFC which are tied up with each bank. So we see in the PSU bank category, the Central Bank of India is the largest one in terms of number of tie-ups which have been done till now. And then there may be State Bank of India and the other banks have followed in that category. Next. NBFC. So we see there are many NBFCs. I think more than 55 NBFCs are there which are tied up. And the NBFC called IIFL, I think they are the largest one till now in the overall co-lending space in terms of the overall portfolio which have been generated under co-lending model. The broad eligibility criteria in the co-lending. So one is rating, so credit rating of the junior partner NBFC. So most of the banks have put this eligibility criteria where the minimum rating should be A. But some of the banks have considered triple B rating also for the eligibility. GNPA on the entity level, the NBFC level, it should not be more than 5%. I think most of the banks have considered the same. NPA also, and vintage minimum 3 years. So these are the broad eligibility criteria, but there are many other areas are also there in terms of the portfolio size, the profitability. These are some of the other criteria also. So we have senior bankers with us. They will discuss about their policy or eligibility criteria from the co-lending point of view. Next. Yeah. So this is a detailed chart, I think, where we have tried to cover up the policies of the various banks on the co-lending point of view, the broad criteria. So we see this and net owned fund requirement. This SBI is on the lower side where they have kept even 10 crore of net owned fund NBFC can become the partner in co-lending with them. So they have tried to cover up the NBFC which are smaller also. And the other banks have also basically put the criteria in terms of the co-lending. So maybe 100 crore, 200 crore, 1,000 crore. So different criteria are there, which you can check with the bank where you are dealing or we are trying to do the co-lending partnerships. Next, Rohan. So co-lending process. I think it's a process which I think every partner is following, and so this is mainly the loan application and the credit appraisal. So same process which basically any loan has to be sanctioned. The same process has to followed whenever the co-lending partnership is done, and then so how the application will come or the credit appraisal will be done. So the only thing is that in the co-lending, the NBFC partner has to source the loan or to get the application from the borrower, and then they are to there should be a joint credit appraisal by both the parties, and the disbursement should be through the escrow account where. In case of CLM1 model or CLM2, so these are the technical aspects which I not go into detailed manner actually. Yeah, next slide. So there are the commercials between the partners related to interest rate, processing fee, foreclosure charges, penalties, or insurance charge. So these are the commercial aspect between both the partners. How this will be decided, it depends on the relationship or the whatever the policy of the banks, and the sharing will depend on many factors. But these are the areas which are discussed during the commercial negotiations and the commercial discussions. So the interest rate, is a blended interest rate concept is there where NBFC are charging certain rate on their portion, and banks are charging certain rate on their portion, and then it is a blended rate which comes out after certain applying certain formula, so that the ultimate borrower should get the advantage of it. Actually, processing fee, it can be decided between both the partner whether it should be 100% with the junior partner or 50-50 or in the ratio. So these are the commercial terms depend on the various aspects of the partnerships. Next. So the co-lending challenges, I think the biggest challenge which is discussing between banks and NBFC, the IT integration, because let's say bulk of loans are there, which bulk of data is there, which need to be need to flow between both the partners on regular basis. The reconciliation and other things are required, and monitoring of loan also is also required. So IT integration is one of the core aspects. So we have a leading technology provider in the co-lending space with us. We will discuss on that. The coordination between the both the partners basically. So how this can be a smooth coordination in terms of the signing of master agreement, deciding the SOPs, and then the implementation of the policies and the collections. So this is another area where the how the collections can be uh, basically better, or how these collections can be basically passed on to the bank and the NBFC. So day one, day two, or whatever the process is there, and the legal and compliance side, and this longevity of the relationship between the banks and the NBFCs. So these are some of the co-lending challenges, but definitely there are many other challenges which we'll discuss in the our discussion. Next slide. Yeah, Rohan, can you go on the next slide? So co-lending models, there are two models. Basically, the model one, CLM one, which is a direct model where the both the partners are joining together, and they are doing the joint assessment, and they are lending their portion in the escrow account, and then it is going to the borrower. And there is a model two, which is akin to DA or direct assignment, where the NBFC partner is basically disbursing the loan, sourcing and disbursing, and then they are basically getting the reimbursement or whatever the bank portion is there after the assessment by the bank, and then the bank is reimbursing in the escrow account. So we called it CLM 1 and CLM 2 actually. These two models are there. Next. So opportunities, I think this is future which you would like to discuss here also. So this co-lending is helping the NBFCs to basically and banks basically to strengthen their distribution. So NBFC is having a distribution reach at the tier 2, tier 3, or tier 4 cities, and the banks have a lot of funds or balance sheet. So joining hands by both of them, basically it is helping them to reach to the unserved or underserved customers. And another the opportunity there, uh, we have a this interest rate actually. So always a challenge that the ultimate borrower, the interest rate should be reduced, or whatever the best interest rate can be charged in terms of to the borrower. So through this co-lending model, there will be, I believe there will be some advantage to the ultimate borrower in the interest rate also. And other than that, you know that RBI has not allowed the entry of the big corporate houses into the banking space. So the NBFC floated by these corporate houses will now have the more opportunities on the lending side through direct co-lending arrangement, where there'll be the flux of funds, actually money will be available on tap. So they can grow their book in a faster manner also. And then there are many other areas are there where I think this is helping. So the banks can get the new customers, NBFCs can get the long-term money. So these are the many opportunities are there where both the partners are into the win-win situation actually. So this is overall from our side in terms of our understanding in terms of the co-lending. And now I would like to come to the panel. We have an eminent panel with us, and I'm thankful to them that they have joined us at very short notice also. So first, I think ladies first. So I'll invite, I think, Madam BG, Miss BG SS. She the Senior General Manager of South Indian Bank. So friend, this is one small feedback or a small question for you. We like to understand what do you understand about the co-lending, and if you can just type the whatever the option out of these four options are there, we'll just do the polling of that and we'll know that what we understand about the rural credit actually.
Thank you,
Madam,
Ashish.
yeah, madam, thank you so much for joining with us, and I'll be very happy to know more. What the other our audience will be happy to know more about the journey of the South Indian Bank in terms of co-lending, where you are, and in terms of the whatever the eligibility criteria, or in terms of the portfolio which you have already created in their co-lending, and which are, and how any NBFC would like to approach, how they can approach to you. So over to you, and thank you, ma'am. Thank you very much.
Thank you, Ashish, and also for the introduction, and also the introduction on co-lending that you have done. So collaboration is the buzzword in the financial industry now, as we all know, not just in India, across the world, we can see that. And that's a way forward as well. So instead of competing, we are trying to come together and serve the customers and serve the nation as well. So we can see that as you were showing in your presentation, so many partnerships coming in, many banks and NBFCs announcing the partnerships and all. And the total AUM that has achieved around 25,000 crores of business that was achieved in the last year, which is actually the exponential growth is there compared to the previous years. But when we compare it with the total credit growth that has happened in the country last year, maybe around 18 lakh crores of business that has credit growth that has happened, it's not commensurate with the number of tie-ups and this figure. So that's where all the FDFCs and the bankers need to work upon. But through this journey of maybe 3 years, I think the bankers and both the NBFCs now know how to take it forward. Many processes getting streamlined, clarity on many areas, and of course the technology partners. Many people are coming in terms of the managing the transactions and the process as well. So now definitely we are sure that this is going to be the one of the major lending products in the way forward, and the whole lending landscape, this will be having a major position in that area as well. And if we look upon all the products that has come in the lending landscape for the past few years, which are tried and tested, we can see that this is one of the most prominent and promising product in terms of it is beneficial for all the stakeholders, in terms of bankers, in terms of accessing the distribution of the NBFCs, and for the NBFC while leveraging upon the capital strength of the bankers. For the end use of the borrower, it is the blended rate, the lower rate that is coming in. And of course, the whole structure, the whole narrative is supporting the financial inclusion of that area of the nation as well. So definitely, this is a highly promising segment that is going to grow exponentially. In terms of our journey, so we had the vertical setup in South Indian Bank for the past 3 years. So initially, we experimented with each vertical going ahead and starting discussions with the NBFCs. Then we realized that's not the way forward, or that's not a successful, will not be a successful journey. So we formed a specific vertical for that, which is headed by a person and a small team there. And individually, which all are the business or which all are the segments where we have opportunity depending upon the geography and all, we are selecting few NBFCs. And I'm happy to announce that we have few tie-ups already done, a small business that is growing, and few announcements will coming in maybe in the coming quarter as well. So we are quite optimistic and of course aggressive also in that area. And since I'm presently handling the corporate banking group, which is handling the larger NBFCs as well, certain discussions are happening there as well. And just to throw light upon what happened in the last few days after the RBI announcement, slight change in the segment that we are seeing. Earlier, the small NBFCs were coming in for the discussions. Now we can see that the larger ones are also slowly moving to the bankers in terms of the co-lending part. So that is just my view on that and what our bank is doing, South Indian Bank is doing in that area. Thank you.
Great. Thank you so much, Viji ma'am. I think you are very well covered. So was one of the promising product actually, which from the banking point of view, that's a great thing. And the last comment which you have given that some of the large companies are now also coming up. So the pace which is not there, I think, as you told it, 80 lakh crore of the total loans were disbursed last year actually. And out of that, this co-lending was small. I think this year this will increase, or this will be the big volume will be there actually in that. So thank you so much, ma'am. Thank you so much once again. So friends, now we have another speaker, Ms. Snail Gupta. Siege SBP with Credit Saishan. So just for your information, Credit Saishan is a NBFC, Japanese large giant has set up the NBFC in India. So she'll brief about this Credit Saishan also. But Snail ma'am, first of all, welcome to you and thank you very much. And
Thank
we would
you
like
so
to
much.
understand from you because you are an NBFC and you are partnering with the banks. So on one side and on the other side, you are partnering with the NBFCs also. So NBFC to NBFC, co-lending partnership and bank to NBFC. So what is your understanding till now on this co-lending side and what is the journey of the Credit Saishan in the co-lending side actually? Over to you.
Sure. Thank you so much, Ashish. Of course, BG ma'am has covered so well about, kind of introducing the landscape around co-lending in general in the market. So needless to say, co-lending from an NBFC perspective is a great tool for us as far as the liability management is concerned. But if I talk about Credit Saishan in particular, we have not looked at co-lending just from our liability management, but it has been like a great strategy for us as far as our asset creations has been concerned as well. So right since our journey, so while of course Credit Saishan Tokyo, which is our parent entity, has been a very well-known name globally as far as the retail assets are concerned. In India, we started our journeys in 2019, roughly 2019 is when we got the license and 2018 is when we had started actually our journey. So more or less give about 5 years since we have been in existence in the country. So right from the beginning, we have believed in collaboration. We have believed in the partnership. And another key feature for us, which has been part of our strategy, has been investment in the technology. We believed in enabling IT systems, leveraging the technological expertise, and building strategic partnerships where, of course, like co-lending in the PSL or in the non-PSL space, because PSL is not so much relevant for us, even for our asset creation. So if I talk about our overall asset sizes as well today, roughly around 50% of our assets as of today would be coming in from the various tech-enabled partnerships that we have from this particular vertical. Now, as we matured in our journey, we also believed and we immediately saw the benefit that co-lending on the liability side can reap for us as far as the ROEs are concerned. Of course, Immense has been already spoken about the benefits that co-lending brings for any NBFC as far as the returns are concerned. Because of the 20% asset that remains on my book, there is a blended benefit both on the COF. Naturally, what happens is my ROE kind of goes up. So we have believed in maximizing that as well, because I'm able to turn over my debt at least 2x more than what I would have been able to do it in a normal scenario. So we have believed in that as well. So over the last 1 year, we have also been focusing in terms of partnering and collaborating with the various PSU banks in the country and being like a junior partner to them and originating loans in the priority sector lending with them. So we believe this is a very, very promising strategy and promising tool for us. And especially the clear guidance that has been coming from the regulator has again been a very good enabler for us as far as our strategy is concerned.
Thank you so much. I think very well covered. 50% portfolio under co-lending basically. So this is under partnerships actually, which you told. So you are the larger partner and senior partner, and they are the junior partner basically. But what about the partnerships under where you are the junior partner and senior partner each bank actually, which you have told that you are starting?
We are in slightly early stage, Ashish, while we have gone live with one of the leading PSU banks in the country, and we are in very advanced stages of going live with 2 other PSU banks of the country.
So one important question is coming here actually. If you see the most of the NBFC, when we are talking to them as an advisor, they are saying that we are having a lot of capital actually, so we don't need the co-lending partnerships. What is that? Because what I understand, Credit Saishan is not having lack of capital actually. So what excites you to come to the co-lending? Why this will be helpful to many of the NBFC, those are having this kind of thought in their mind actually.
See, the answer to that actually lies in the unlocking of the ROE maximization if I resort to co-lending as far as my liability strategy is concerned. And this is, I'm even talking about the days before the RWA increased norms that have been announced by RBI. even in a BAU, say as a responsible NBFC, we would like to lever our capital, say to the extent of 4x or maybe say around 5x, right? So there is a limitation over there as far as the prudential norms are concerned. So there is a overall assets that I can create on my existing capital is limited. However, if I resort to co-lending, there is an immediate unlocking of this equity, which can actually work more to generate more assets and in turn generate more revenue and profitability for our shareholders. So definitely we look at co-lending as a great ROE maximization tool as well.
Thank you very much. Very well covered. I think these three messages which you have given, ROE and lever of capital or profitability, these are the major aspects when any NBFC looking to partner with the bank for co-lending actually. Thank you so much, ma'am. So friends, now we have Vinay Bhatt sir. Vinay Bhatt sir, he the GM in Karnataka Bank and he a veteran banker also. So Bhatt sir, first of all, welcome to you. And Karnataka Bank is a known name. So we'd like to, sir, understand from you the journey of the Karnataka Bank in the co-lending space and where you are and where you want to reach actually. And any eligibility criteria for the co-lending which is there for the NBFC.
Yeah, thank you. Thank you very much, Mr. Ashish, for inviting me for this. Karnataka Bank of late, maybe about somewhere around about 3 years back, we actually started thinking about it when it was on the co-origination model. But then again, it didn't work at all because of various problems which has come in. And then when the Salem 2 was brought in, wherein RBI has given that you can go akin to the DA model in case of coming under the CLM 2. Then the whole discussion started catching up and the whole process started initiated. The initial challenges were basically on policy because the policy were never matching. The procedures were never matching. And then on the technology was a little bit difficult to achieve. So under these 3 or 4 basic difficulties, banks started channelizing its efforts to have this inorganic part of the growth to commensurate the organic growth in PSL category. So we were restricting ourselves to the PSL category. Our policy is also restricted towards the PSL category under co-lending at the initial stages. What we thought was that instead of having multiple channels or multiple technology integrations, it is better to have a single technology platform, and then we can connect with various other NBFCs on the other side as a plug and play. But however, that also came to a challenge because a few of the NBFCs were not ready to come on a single platform. They preferred to have a one-to-one integration. So this resulted in multiple integrations and also it resulted in delay in various projects. On the other hand, as far as the policies and procedures are concerned, the banking system is being used to certain amount of risk categorization. And within the banking system, various areas or the various verticals were more attuned to the present policy permutations. So there has to be a cultural change which has to come within the organization to adapt to the NBFC policies, because unless otherwise you are attuned and adapted to the policies of the NBFCs, you will not be able to reach the last mile. You will be end up as a bank only. So that took a little bit challenge internally to take the players on board and to make them believe that this is a new model of working which is going to work in the future. And as Madam Eji told, this is going to be the future and we need to adjust towards this. So these were 2 or 3 challenges which we internally faced, but we overcame that through creating a intergroup coordination teams. So we have intergroup coordination teams which are working for specifically on co-lending part, where multiple discipline teams are coming as one and they take forward all the challenges on a daily basis. We are having stand-ups and there are multiple associations which are already been, we have entered into. But as told, the baby steps are being taken. As far as Karnataka Bank is concerned, we are not going so aggressive because there are 3 or 4 very important things which we need to understand. One, the data collection and the performance evaluation has not been happened yet. This is in a very nascent stage. There is no comprehensive availability of any systemic data which is there today. Even the regulations, the rating bodies and the industries are looking at it at a nascent stage with a specific eye. We have seen some of the regulatory agencies coming off late. And also there is a blurred line between the co-lending, the BC, and also the service providers. So there are very, what do you say, if I will be a devil's advocate here, going gung-ho, going all out in this may be a little bit difficult for the banks. We need to take a very cautious approach. At the same time, I also do agree that the future depends on such coordination as well as cooperation between NBFCs, banks, and technology platforms. So that's what we feel, and we are having some approaches towards it, some targets being specified, and also some growth prospects being defined. Thank you, Ashish.
Thank you, sir. Thank you so much. So baby steps you have taken actually. So it's a beginning which has already been done, but the way you have narrated the journey in terms of technology. So you said that initially this was a single service provider, then multiple service provider and the technology side and all. So we have Kushalji will discuss on that actually. We'll cover up what he thinks as a service provider actually, and then the adapting of policy of NBFC. This is a big question, I think. So because it's a partnership where it should be win-win for both the partners. And the way the NBFCs are onboarding the customers or the informal income assessment and all these things, generally banks are not having this kind of model in the system. So unless until the informal income assessment model will not be adopted by the banks according to NBFC policy, it will be very difficult to grow this partnership actually. So this is a big shift or big change which will come in this. I think some of the banks have taken up some initiatives, and other banks will also take some initiatives actually. So thank you very much for your guidance and the deliberation. Friends, now we have leading bank of the country, Bank of Baroda, which is known for the technology and a lot of digital initiatives and all basically. And so we have Dhruvashish Bhattacharya, sir, who is the in charge of the MSME and co-lending. So first of all, sir, welcome to you. Thank you very much for joining with us. Sir, so everybody would like to listen to you that what the Bank of Baroda is doing on the co-lending actually. So where we are and where we want to reach actually. So if you can cover up on that, it will be great. Thank you so much.
Thank you, Mr. Ashish. I hope I'm audible.
Yes, sir. Yeah.
Thank you. So first of all, thank you for giving this opportunity. It's always a pleasure to speak in the forum conducted by Resurgent. I've attended a few of them in the past, and they bring out excellent topics for discussion, and we get good questions also from the audience. I also heard the eminent speakers, and they were absolutely bang on insofar as the philosophy behind co-lending and how they are maneuvering the whole piece in the respective institutions, and I felicitate them for that. So insofar as Bank of Baroda is concerned, so before briefing about what we have done and what we intend doing, I just wanted to highlight here that there's one piece which was probably missing in the whole discussion, is that this whole concept of co-origination, post which the co-lending from 2018 to 2020 and now, stemmed out from a big crisis, and that's when the government intervened and found that post the IL&FS crisis and the DHFL crisis, they felt that there was a need to, bail out the NBFCs, particularly the ones. So initially the thought was that the three entities involved in this, which is the customer, the bank, and the NBFCs, all of them should be benefited in the respective manner. And this is a brilliant, concept-wise, it was brilliantly contemplated. The NBFCs were probably struggling with the liquidity and pricing. There were some who were struggling with liquidity, there were some who were struggling with both, and there were some who were struggling with only the pricing. That's wherein the NBFCs flocked to the banks for the co-lending partnership. The banks, which obviously saw this as a meaty product because that gave them the access directly to the customer. All the public sector banks, typically, I wouldn't be commenting on the private sector banks, but the public sector banks are severely challenged in terms of relationship because of the change in the workforce at the branch level. So the relationship building really does not happen. So every time relationship cannot be built purely on the brand. It is the person, it is the Spock who is responsible to build the relationship at the ground level. That's wherein the public sector banks typically face the challenge. And therefore, they saw this as a meaty product wherein they get a direct access to the customer through the NBFCs. And of course, it also gave a kicker in terms of the blended rate would obviously be higher. So they were looking at the ROA, going north. And of course, it was for the benefit of the customer. The regulators always and the government always wanted the customer should be the ultimate beneficiary, and therefore the blended rate, which would be lower than what the NBFC would offer, would directly get passed on to the customer. So that was the whole genesis and philosophy behind the co-lending. Now, over a period of time, what I find, and this is a typical challenge which bank of our size does face. See, we are currently at a 22 trillion balance sheet, and a co-lending just is in minuscule or an insignificant amount. I do not want to compare, but what happens in the process is that the amount, the effort, the energy, the time which gets invested in this is still not commensurate to the volumes which we are doing for various challenges. I think the eminent speakers have also highlighted a few of them. In your presentation, you have mentioned that there are 4 or 5 major challenges which I would absolutely vouch. While everything looks very green on the face of it, but with the changing times, what we have found that the NBFCs, I don't want to name them. So there are small, there are large, there are mid-sized NBFCs who, who form this whole landscape of NBFCs for co-lending or direct lending. Now, I find that the NBFCs find it very convenient to go a DA mode, which is the pool purchase or a pool selling mode, than going into a co-lending, because this is an arduous process. Now, I have brought this matter to the notice of the RBI, and I did mention that co-lending is probably not surviving or not growing to the extent we all want it to, because there is an animal in a no qualms about that. But you have to see that if you see the banks from the bank standpoint, I think co-lending is any day a superior model compared to that of a direct segment. Now, from the risk point of view, from any angle, if you see, and because one of the challenges which you said, Mr. Ashish, was the longevity of the relationship. Now, when you start a relationship, you really don't know whether it's when it's going to end. There are a lot of NBFCs who may get converted to a bank tomorrow. There are a lot of NBFCs who may divert the field. So from one product line, they shift to the another product line. So you always have that risk of how long this partner is going to stay. And in the event of they not continuing this relationship, the collections get marred, the after sales, the post finance, post disbursement challenges crop up. So I think in total, we need to, whenever your selection of partner therefore becomes very critical. Ashishji, I'm now being very critical about this whole piece because I have spoken to not less than 50 NBFCs on co-lending for the last so many years. And I have found that the choice of the partner you're making, the right kind of partnership, will only come when you have the right partner in place. One. Number two, you need to complement each other rather than trying and taking advantage of each other. So what do I mean by that? So today, if you talk about an NBFC, if they are only focused on increasing their ROA, and at the cost of the bank's pricing, that is not right. We are very clear that if you are making an X percentage of ROA when you do a sole lending, and in a co-lending, if you are putting a premium, that premium should also come in the bank's ROA because we are 80% partner in that, right? So we need to complement, understand, empathize each other rather than being the big daddy or a smarter player here. So it's nobody smarter than anyone. We all know what we are, right? We need to play to our strengths. So NBFC has got an inherent strength, bank has got an inherent strength. Let's blend it. Like in a marriage, it can't just work on one side. This is also marriage. So I take it in the right spirit. And whenever I talk to the NBFCs, I clearly say that, भैया अगर आप यहाँ पे पैसा बनाने के लिए केवल NBFC co-lending कर रहे हैं, that's not the intent. So if you are in the money-making business, please allow us to also make money because I'm taking 4 times more risk than you. Okay. So I think that's the long story cut short. It's a brilliant concept, Ashishji. And I was one of the initial, I had the fortune to kind of draft the initial co-origination paper along with my erstwhile MD when RBI had sought for the this thing. So So I was very well ingrained into this. But as the time changed and I see people are maturing, and rightly said by my friend from the panel, is that now you will see the large NBFCs coming in post the intervention of RBI yesterday. So, and in fact, while I'm discussing, there is an NBFC sitting outside waiting for a meeting with me, a large NBFC. So, so I don't want to, I can carry on and on this particular topic because it's very dear to me, because this is something which we all contemplated in the beginning to be a big hit. So the figures which you see, 25,000 crores, 5,000 crores, I'm not jumping into numbers. The numbers are actually scratching the surface. As Madam is rightly saying, out of 18 trillion of credit, if you have done 25,000, you're just scratching the surface. There's a long way to go, but it should be in the right earnest, in the right spirit, and it should be embedded as a long-term relationship rather than a short-term game. That's all from my side at the moment. Thank you.
Thank you, sir. Thank you very much. I think very well covered and very straightforward, actually. I really like it. One message you have given in the overall discussion, that win-win situation, there should be a win-win for both of them, actually. It should not be lose-win or win-lose, actually. So I think it must, your message will pass on to the relevant partners, and definitely they will come to you with the proposition. They'll come with the win-win proposition, actually. But again, I will say that it's starting, actually. So many people don't understand the overall impact on the this and the overall business and the whatever the profitability and all. But definitely, I believe whenever the more partnerships will be there, I think there'll be more clarity on that also. So thank you, sir. Thank you very much for your deliberation. Friends, now we have Mr. Kushal. He is basically the founder of the Knight Fintech. So this is a company which is helping in co-lending in the technology side. So first of all, Kushalji, welcome to you in this webinar, and thank you very much for joining with us. So we would like to understand from you what excites you or what brings you to in this space, actually. And from your point of view, because everybody is talking the integration of technology and all the discussions which we have. So what is your understanding where we are actually, and where we can reach, and what kind of challenges are still there in the technology? So over to you, sir. Please take it forward.
Hi, good evening, everyone. Thanks, Ashish, and thank you very much for having me here on this panel. I was like hearing to all the eminent panelists, and it was like really great to hear their thoughts, and with such a knowledgeable session, and getting their inputs of what are their exactly pain points and how they're seeing co-lending. So if we talk about our own journey about co-lending, and to your question, why we got interested in co-lending. So Knight Fintech, so we are essentially a new age banking infrastructure company. So prior to the co-lending, we were like focused into the treasury as well as lending space. We built an end-to-end lending stack, right from the origination to underwriting to the servicing aspect of it. And this was a time when November 2020, when the RBI circular came, and about the co-lending. And we really felt that this is something, which could be a very impactful change, the regulation where the industry would trend. And we started, kind of focus on the co-lending. So now today, co-lending is our major business, while the lending, digital lending, as well as the treasury continues. Right? If we talk about in terms of the scale, obviously we started small. We started working with one of the biggest public sector banks as a small POC back in 21. And then basically, kind of just went very fast. And we see the journey has been exponential from that point in time. From one bank, we've seen right from the challenges in terms of what exactly the regulation is, what the regulator wants, to today where we stand, probably kind of seeing the kind of volumes that the industry is talking about. Right now we are kind of working, servicing like close to about 8 public sector banks, about 4 private sector banks. We are kind of engaged and working in different capacities across the co-lending as well as pool, and kind of managing close to about 12,000 crores of assets. So at that point in time when we started, we really felt that the co-lending for lending could be something what was the UPI moment for payments. So we could see that this was something which has a fundamental, which has a lot of potential to change the lending fundamentally, right? And the reasons, I think, as all of the eminent speakers said, that it is a sort of it has a potential to be a win-win solution for all the stakeholders in the value chain, right? So where essentially the customers are able to get the cheaper loans and is still able to match the tag that an NBFC is promised, especially a new age NBFCs, and also at a kind of the interest benefit, and with the, as Dubashish sir and other eminent panelists said, that there should be the interest benefit which should be gained to the customer also, and as well as the bank should also get benefit. So there are the benefits across the value chain. That is why we had seen that there can be a big potential for co-lending to pick up. Now, specific to the challenges, if we talk about, yes, there would always be the challenges because it was something which was very new for the industry, and everything from the processes to the SOPs to the policies, how this has to be adopted by the industry, that was something new. And again, from the processes to the technology, it was new for everyone. And so overall challenges, if we see the first, if you kind of look at the journey, so first is like the origination part. So because the banks, when they're entering into a co-lending, they would want to partner with multiple NBFC partners across multiple products, right? So it could be agri, MSME, retail as well. Each product would have its own life cycle, right? A bank wants to partner with probably multiple NBFCs, right? So probably starting maybe with 5 or 10 partners and with eventually planning to go up to 20, 30, 40 partners. We have few banks who have an aim to even partner up to 200 fintechs and the NBFCs. So that is the kind of what we see the interest in the industry. So when talk about the origination, how the data flows from the NBFCs to the bank, it is itself in a challenge, right? Because now NBFC have their own ecosystem, they have their own systems, and banks have their own systems, and these two systems are not talking to each other, right? So kind of working into silos. So what Knight Fintech built was kind of a industry's first sort of a co-lending middleware that sits in between and have a deeper integration capabilities with the banking infrastructure, so that the different originators, whether they are NBFCs, fintechs, etc., so they can directly integrate with the middleware. So it's a one-time integration for a bank, and also for the fintechs and NBFCs, that once they do one-time integration for one bank, the platform automatically enables them to do business with other banks, right? So it's kinds of also significantly reduces the complexity in terms of the integration, or also reduces the go-to-market, right? So if maybe a first-time integration could be anywhere between 3 to 4 weeks, but after that the go-to-market can be significantly smaller. So right now we are kind of enabling on the lender side, as you said, about 12 banks, and on the originator side or the NBFC side, close to about 45, 50 odd NBFCs who are like already working with us. That kind of creates a kind of a value proposition for the banks, that how they can, once they get basically on the platform, how they are also able to do business with multiple partners, and potentially facilitating, given the policies fit between the two lenders, how they can do business together. So we are able to solve challenges piece by piece. The first was the origination, the second was the underwriting, that how underwriting can be streamlined, because again, there are different parameters. How do we streamline the underwriting parameters? But it's still the major challenge lies in the accounting and the reconciliation piece. That is something which we see probably 80% of the problem statement, which many times many industry participants probably underestimated the challenges in the reconciliation. And I think the challenge is simply because different players will have different systems, different accounting standards, different collection cycle, different repayment logic. So there are a lot of things. And there was no solution in the industry which can handle so much of a variety of so much of a products and so much of the accounting logics and the reconciliation related, which lead to eventually the reconciliation challenges which were happening all manually. So we were able to build that solution to solve those reconciliation challenges, to actually mimic those logics which are required so that the reconciliations can be automated. And the another bigger challenge for the reconciliation was the access to the core banking system, right? Because again, CBS is something which is ultra sensitive thing for any bank. So when getting access to the integration to a core banking system, which takes time, and also with the stringent policies of the banks in terms of CISO compliances and everything. So all of those things would be the part of the overall process. But once we are able to build those, basically all the integration pipeline, then things become much smoother. And that is what we have seen when there was a time when we probably were doing 20-50 crores a month, which has now grown to roughly 3,000 crores a month kind of a volume. So that kind of a volume we have seen an uptake in roughly 3 quarters, for the last 3 quarters. So we have seen that the volumes are picking up very rapidly. The partnerships are happening, more and more partnerships are happening. So we are seeing very good uptake into the co-lending and very good momentum building up in the industry across the lenders, smaller NBFCs, mid-sized NBFCs, large NBFCs. Public sector banks were obviously way ahead, and now the private sector is trying to catch up.
Okay. Thank you so much. I think you are having this positive view that the momentum is there actually, and the things are happening on that actually. So technology-wise, you are saying there is no challenge actually. If I see.
Right. So technology-wise, per se, there was a time when the technology was not existing, and now the technology is there. Now it is about how soon we adopt the technology and kind of streamline things end to end. Yeah.
Okay. Okay. If possible for you, can you just give some understanding on the costing aspect? Because whenever this technology is coming in the picture, everybody is saying this is additional cost to us, or who will bear this cost and all. So if you can cover up, because all they say all your trade secret also, but if you can discuss something on that.
So I think there is a reason why industry is gravitating towards co-lending, right? Because from an economic standpoint, there is a lot of money to be made for, and there is an economic value for everybody, right? Whether it's an NBFC or bank, right? Because banks are able to get to a different asset class where the return on basically the ROI would be higher than the regular assets. And as well as for the NBFCs where the cost of capital goes down, thereby improving the ROA and ROE. Right. So there is, so if we look at the cost, I think the way to look at is what is the cost to benefit, and right. And as long as the cost to benefit, if because of co-lending, probably then incremental gain is 100 basis points or 200 basis points, right? Then the cost to benefit, as long as it is in a 1:10, 1:20 ratio, then probably it is an investment and not a cost. It's not an expense. Probably that is how I think probably what we have seen with majority of our partners, that they actually see it as a profit center, that it's kind of something which is generating more revenues and hence more profit, and the cost is a very small fraction of it. Right? And I think the industry is evolving more towards the OPEX model than a CAPEX model. So most of the partnerships have been on an OPEX model. So which is also, you know, kind of that it doesn't require a very large outlay upfront as a CAPEX, right? So there's a kind of a minimum commitments and, you know, the transaction AUM linked pricing. And as the AUM scales up, the pricing, we kind of work as a partner, serving not just the technology, but also our interests are aligned in terms of scale and also bring new partners, right? So for an NBFC, we try to bring new partnerships from bank side. And for banks, we try to bring new NBFC partnerships, because kind of building that ecosystem as the industry's first, and, you know, kind of we have like significant market share towards the co-lending. So we are able to kind of help and bridge those and make those new partnerships as well.
Okay. So this is your OPEX model, not the CAPEX model actually. So this is a very clear understanding which you are giving. So it's not like that somebody is investing a huge amount at the initial stage and then basically it might be a challenge for them later on. But so according to the business is building up, the cost is incurring actually. Thank you so much, Mr. Rastogi. I think it's a great deliberation from your side. So ma'am, I'll come to BG ma'am. Yeah, sorry. So BG ma'am, I'll come to you. Just to understand that despite of this now this technology there and everything is there, but still the sharing of the structuring of their data, again there are a lot of implementation challenges are there. So do you have any suggestion on it, or do you have any an idea where how we can overcome these challenges of the data sharing and data structuring?
Thank you, Ashish. So Kushal has covered the technology aspect and what all are the solutions they are providing, and from the bank side, what practically we are experiencing. I'll just come to that point. So as we see for the past 3 years, the major players or major NBFCs who are coming in for the co-lending partners are the smaller NBFCs. So once any tie-up to complete, historically we can say that it is around 6 months time it is taking it to a logical conclusion. So if you take the time frame, the technology part is something which is consuming the major part of it, not just in terms of time itself, but the energy and intellect as well. So once that the first two fragments are concluded, and when we come to the third part, what happens is that most of the time NBFCs will try to have an SFTP model where the data is flowing through file by file, where banks are not okay for that. We will try to have an API integration, or else bringing in a third party like Kushal was mentioning in terms of both the LOS, LMS, and covering all the areas. So here cost will play a major part for the NBFCs. The API integration, of course, for that the whole cost that is required for them if they are having more than one partner with them, and for more products, again more investment is required, which will of course will be elongating the process, both for API and both for bringing in a partner, as he was mentioning. Some cases it will be AUM based, and some cases it will be transaction based. Definitely there's a cost involved in that area. So once that is converged, also coming to the security part, like the CISO clearance, which is of course will be a long process, especially when the NBFC is having other third-party vendors in terms of the loan origination or underwriting and all those areas, because that area is to be considered from the CISO perspective. So once that also is covered, now the real problem happens when the real data starts flowing from the NBFC to the bank in terms of the file flow, and then after the other two areas, which is the escrow, the managing the escrow in terms of the disbursement and also the collection. So here the nuances, everything is to be dissected by both the partners sitting across the table and visualizing everything. That is a way forward for a seamless journey of the partnership. Otherwise, what happens once we stumble upon even the trivial matters which we consider, sometimes it will require some policy approval. Then again, the whole process of going back to the policy, and sometimes in terms of the board approval as well, may come in even for small aspects. So this area of covering all aspects of the transaction, sitting across and dissecting each area. For example, in terms of the interest calculations and all, sometimes NBFC will be having a 360 days interest calculation where the banks will be following 365 days. And the IRAC norms, the prepayments, the charges collection, all these areas will require technological capability. So as Debashish sir was mentioning, while selecting a partner, the strength of the partner in terms of the execution, in terms of the origination, the way they handle the collection, everything is important. Similarly, the technologies, that part, the strength of the partner in that area is also highly important for taking the whole journey to a meaningful closure and continuing. This is a long-term relationship. We cannot stop in between. So there we need to sit across and see each area and cover those areas, especially the escrow management, wherein we will be having a lot of issues in terms of the reconciliation. So instant disbursements as well as real-time reconciliation. That will be a narrative for the success of the whole partnership. So here again, when the game changer maybe for the future can be the OCEN, which is the open, which will be what you call the whole segment can undergo a change in when the OCEN is coming up, where the collaboration between the lender, the borrower, the aggregator, the LSP, everyone can happen in a seamless manner, and co-lending also will get benefited from that. So that will be the future. We can expect that in an optimistic manner itself. Hence, to conclude, in detail discussions are required by both the partners to taking the partnership forward in terms of technology.
Okay, thank you very much. So I think you have given very good point. The visualization of the future issues actually, which should be taken up in advance, and then if it can be covered in the initial discussions or initial documentation and all, I think the life can become easy for both the partners actually in the future. So thank you very much for covering in such a manner where a lot of coordination is required at all levels on both the sides actually. So thank you, ma'am. Now we have the one question for Snail ma'am. Actually, Snail ma'am, as you are NBFC and we see the RBI circular. I think RBI has put that one condition that the NBFC should have the give the undertaking to the bank that whatever the contribution toward the loan amount, the 20% money which you are putting in the co-lending model along with your partner, it should not be borrowed from the same partner actually, or maybe the subsidiary or the associate company of the same partner. So in nutshell, we will say that the 20% contribution which you are bringing in the loan, it should be sourced from the other sources actually. So what is your take on that, and what do you think that this is right, or there should be some change required on that, or is there any hurdle on that because of that to the NBFCs?
See, from the governance and the prudence requirement, I think it is a good, very, very good stipulation from the regulator, because obviously when we are talking about actual skin in the game from an NBFC side, it cannot be again using the same lending partners' sources of fund and putting in the same capital over there, right? Because ultimately we are then say, for example, if something is amiss, then we are just increasing the risk in the overall scheme of the things. So as far as the spirit of this guidelines is concerned, we are totally aligned. And I'm also equally cognizant of the fact that practical challenges remain, because money has no color, right? Because the money, once we get the sanctions from the bank, then money comes in, money sits in the bank, and which is used to create assets. Now, I would again refer to how we are kind of managing this in KSF, right? So once again, for us at KSF, governance are held in the highest order of priorities. So there can be absolute zero slippages as far as governance is concerned, risk management is concerned, or the system level robustness is concerned. So when we talk about this particular requirement, wherein I should not be utilizing the same lender's capital to originate my 20% asset, see, first and foremost, we are doing an 80-20 arrangement in a CLM2 model. What it means is that there is, if nothing, but there will be literally a 1 month's gap from the day we have originated the loan to the point the actual assignment is happening to the lender in the future. So to the extent on the day of booking the loan, there is, we would have already utilized, if it is the same lender, then the funds would have been utilized. And we have a process wherein there is an end use statement that are maintained. And we have a process wherein every loan is earmarked even to the lender's money that has been utilized actually. So which helps us in keeping a track record of it and following this particular requirement. Having said this, we understand there are challenges. Maybe for smaller NBFCs, it becomes a bigger challenge, because for them, it is almost like mingling of the funds as well.
Okay. But money is fungible actually. So this question is coming every time actually, how you can divide that basically. So you are borrowing from the same bank and you are doing co-lending from the same bank actually. So
the end use certificate helps us,
these discussions are already there in the.
Sorry, I think there was a lag. Yeah.
Yeah. So there are many ways of basically. So there are many ways of this basically. So the capital adequacy ratio will also define whether you are using your own capital or you are using borrowing funds. So there, I think this issue is still under discussion actually, where how this can be categorized or how it can be identified that these funds are not used for the same purpose actually for co-lending partnership actually. Because the same bank is giving you the lending also, and they are the partner with you in the co-lending actually.
But see, fundamentally,
so thank you very much. I think you very well covered that there's some kind of corporate governance or some kind of.
Yeah.
Yeah.
No, seems to be a network issue. No, but one thing I was saying very categorically is the fact that there is some bit of a time gap whenever we are doing a CLM2 helps us manage the situation much better. If it is about, say, following CLM1, then I agree with you, there is a higher chance of commingling. But the fact that, there is an end use certificate which we have already provided to our lenders, there is enough time available to us in which we can actually earmark these particular loans that have been originated in our books against the specific lender, help us in actually categorization of the loans and then channeling the respective loans to the correct set of lender. Second thing, the investment in the technology is again something which has helped Credit Saison. So we have robust systems in the backend that help us manage this better.
Okay, thank you very much, ma'am. Thank you. But sir, I'll come again to you, and there is one small question which we like to understand from you. This is regarding impact of co-lending on the MSME and priority sector lending, basically. So the availability of fund for the availability of more funds for the MSME and priority sector, and what else could be done to improve its efficiency or getting more funds for this priority sector or MSME. So we can cover on that, sir.
Yeah. So Ashish, I think with reference to the co-lending on today's date, more focus being given on PSL. The penetration of these entities into the ground level is much more effective rather than any other banks or the methods in which banks are being lending nowadays. The only issue was that the availability of the funds at a cheaper rate, and that is getting now addressed by way of the co-lending. So now the expertise which NBFCs have at the ground level to dwell deep into the last mile and the collection efficiency, that is much more important, because the collection efficiency of the NBFCs, when you consider the way in which the lendings are happening because of their presence at the ground level, is much more persuasive, as well as much more penetrative as it is compared to the banks. So the directed lending, which is now being given to the PSL side, especially into the MSME as well as the MFI segments. Again, the banks are also, if you look at the way in which the banks are playing it out also, that it helps us in achieving our priorities and targets too, by way of penetrating deep into the MFI segment also. Overall, I think that there is going to be a improved financing at the ground level. At the same time, there is also a thought process which is going on, wherein there will be an over leveraging at the ground, how to control that also. So there are both ways interpretations are happening at the market, whether there will be multiple double financing happening at the ground level, etc. are also there. But however, being said that, I think that in the coming days, the availability of the funds at the ground level is going to get improved a lot by means of co-lending being a very strategic tool by the banking concerns in order to reach the last mile through a vehicle of NBFCs. So obviously it is very clear here. And one point I just wanted to add here, because what we have also seen is that even though we speak about a blended rate, when the CLM 2 has come, the efficacy of that blended rate is lost now, because virtually a transaction is becoming akin to a DA transaction under CLM 2. So that way, I think there may be some issues in the coming days, because the concept of blended rate, which is actually the base for the co-lending under co-origination, is, I feel, as a personal level, that is getting diluted under CLM 2. Thank you.
Okay. Got it, sir. Thank you so much. So for you, I think the availability of funds is already there. The more availability of fund is there, collection efficiency has also improved actually from the banking point of view actually. Win-win for banks. So Dhruvashi sir, I have one question for you also. So this is related to the challenges in accounting and the reconciliation in co-lending actually. So what potential solutions can be there? Because you told that you are the founder of this co-lending model along with the other RBI stakeholders and other people. So this is still a discussion that the reconciliation and accounting challenges are there. So what are your suggestions to make it more smooth and in a better manner actually?
Yeah. So that's a I know this question was coming, and I keep answering this question in various forums. So Ashish, kya hai ki you have to understand one thing, that as I said, choice of the right partner, and then once you get the right partner, you have the right arrangement. So the SOPs and the SLAs which you write, the master SOP, the standard operating procedures, are very, very critical to this whole. Everything will fall like a pack of cards if you cannot implement this to the letter T. Because today what you so it'll be reaped by the future generation, right? Times to come. You may not be here. So I think you have to discuss, as I think someone was telling, I think Madam was telling, Biji Madam was telling, that you have to sit with your partner, threadbare, invest a lot of time in each and every element or parameter which encompasses this whole SAP. It's just not about business or the commercial. Commercials can be discussed, across the table within half an hour, 1 hour or so. But detailing out each and every aspect. So coming to the accounts part, technology is one large piece, which of course involves the IT. So whenever we do, I can tell what Bank of Baroda does. When Bank of Baroda enters into a partnership, so for instance, I decide the commercial and put it up to the board and get an approval. Then what we do is we have the various teams. So we have someone from technology, we have someone from operations and service, we have someone from accounts, we have someone from cash management. We have a whole team who sit with and we demand that the NBFC should also bring a similar team for discussion, because I may not have that much of inroads into the as far as knowledge is concerned in IT or in accounts. Someone who is an expert there who handles that very well. So we often call them, and there is a team which sits in front. We lock ourselves in a workshop kind of situation. And we bring out the changes, because we need to understand what they do. The first is the apportionment. The fundamental question comes is, how do you apportion money? So disbursement is an easy cake, 80-20, 70-30, whatever you want to do. But the moment the money comes in an escrow, so there is a CIP, there is a PIC, the various apportionment which happens. So for in banks, in so far as Bank of Baroda is concerned, and most of the public sector banks, we apportion the charges first. Right. So whereas in some NBFCs, they apportion the principal first. So I'm saying the apportionment logic has to be same. That's it fundamentally. Now, to do that, it's an arduous task for a bank of our scale to actually do any change in the system. So we often request the NBFCs, why don't you, make this change for this particular arrangement? And more of, we have found that the NBFCs have been pretty compliant on that, and they do it. This is one fundamental thing. Then how do you address the broken EMIs? How do you address the delayed EMIs? What are your charges on penal, on the legal charges, on the legal itself? Like all the NBFCs follow the arbitration route, whereas we do not follow the arbitration. There has to be commonality in that. So each and every item you have to list out, and there are the 40-50 pager SOP which is drawn out and which takes care of this. And of course, we cannot do it manually. Once you decide on the SOP, the rule engine, then you embed that in the system so that your platform, the middleware, which Kushal was talking about, and he's an author of such engine in our bank as well. So that engine should take care of the entire reconciliation. I mean, to the last paise, there shouldn't be any difference. Otherwise things will go haywire. Customer pays money, 20 paisa, 80 paisa आपके पास आना है, पता नहीं 21 चलाएगा, 79 चलाएगा. The even declaration of the NPAs, it's like they follow a different methodology, we follow a different. There has to be commonality in each and everything. So I think this is not difficult, Ashish ji, provided you invest enough time and energy and pay enough credence to the whole process. It is this manage is just not about doing business. It is doing business, servicing the customer till he attains the NOC, and in a continuous and a sustainable manner. So I think we have solved. We have got current partners doing very well, and there is no issue at all. So, but you need to invest time, and a detailed SOP has to be fleshed out.
Okay, wonderful, sir. I think you have very well covered in detailed manner, actually. So it's not a one-day partnership, actually. It's a marriage, which should hold for long. Actually, it will hold long only when you have the better understanding, actually.
Yeah.
So that you rightly told that a 50-page SOP. So you have to invest a lot of time on that, actually. Then you can reach to that stage, actually. So thank you so much for covering in detailed manner, actually. So friends, I think we have already covered many things, although it's such a vast topic which cannot be covered in 1 hour. I have tried to take up the relevant questions from our panel speakers. And in last, I will say that we have come up very well in terms of many things. We have already crossed our time limit, so I'll not take much of the time. The questions will take, whatever the questions are there, we will take it separately from the panel and we'll send you through email, through your contact numbers, rather than taking it here. And I'm sorry for one thing that Abhay Singh ji from SBI could not join, although he has given his consent, but somehow he got some other very important engagements actually. So he has asked me to grant the leave, this thing that he'll not be in a position to join, but we'll definitely try to bring SBI, because SBI is again the leader of the market, the banking system. So we'll heard from him also the next time that what they are thinking about the co-lending. So, so friends, I'll just summarize whatever we have discussed in 4 or 5 things. So one is, I think, the key point which has come out, that the selection of the right partner is very, very important actually. So not for only NBFC, even for banks and for the NBFC should have the right partner from the banking point of view, which has the long-term vision on co-lending, and the bank should have the right partner on the NBFC side, which has the long-term vision and the corporate governance to take it forward in a serious manner actually. That is one very, I think, good outcome has come from the discussion. And then this would be a win-win actually. So it's not be a situation where we'll lose or lose-win actually. So both the partners should have the win-win situation, then it will go for long actually. And then the not only banks and NBFC co-lending, the NBFC to NBFC co-lending is also gaining the momentum with the RBI guidelines, and also Credit Session has told that 50% of the books in under partnerships under this co-lending model basically. And the one major thing which has come also, this adopting the policy of the NBFC. Unless until the banks will not align with the NBFC policy, it will be very difficult to run it for long actually. The ceremonial master agreement can be signed, but when it will go for implementation, there will be the challenges again and again, and this will not go for long actually. So this is another this thing. And more coordination between banks and NBFC, as Dhruva sir told that we have to sit along with the other departments also. Not only the co-lending department is responsible. The banks and NBFC business heads and the other collection department or risk department, everybody should come in the picture actually. It's not a borrowing actually, just you take the money and lend it and give back to the banks actually. It's a stake of both the partners in that lending actually. So they have to sit together and visualize the technology point of view. I think the technology is available and it's not required that you have to incur huge costs. So OPEX model has come out where I think the technology partners are working on the OPEX model. So the cost will not be a very larger area for you basically. It will be incurred on the when you are building up the portfolio, and the cost will be incurred actually. So these are some of the key points which I could note it down, and I believe this will be helpful to the all the partners, whether it's NBFC, as bank, and the other service providers also. And I will like to thank to all the panel speakers for their deliberation, their time, and basically I believe they are busy when their things, and sir has told that somebody sitting outside is still with us in the webinar actually. So all will be like that, because all you are the very senior persons in your bank actually. You are heading the large portfolio also. So on behalf of the Resurgent India and on my behalf, I would like to thank you to all of you for joining with us. And I would like to thank you to all the attendees who have joined with us in this webinar from the different part of the country, from different industry, different segments. I hope that you will be having more knowledge about the co-lending. If still you have any question, you can write to us. We will be happy to reply on that these questions. And I would like to thank you to my team, Resurgent India team, who had worked very hard to make it successful. So the DM team, digital marketing team, and our NBFC team. So Rohan, Daritri, and other people who have done this hard work to make it successful. So I'd like to thank you to them also. And I would like to thank you all of you once again for joining with us. And we hope that this co-lending will reach to a next stage next year, when we will speak maybe after the end of this year. This number at least will be 5 times whatever was there in 2023. And that will be win-win for everybody actually. So thank you once again. Thank you all.
Thank you, Ashish. Thank you, everyone.
Thank you, sir. Thank you, everybody.
Thanks a lot.
Thank you.
Thank you, Ashish.
Thanks,
Thank
everyone.
you, all the panelists.
Thank you.
Thank you.